The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. I'm your host, Alex Pang, along with my co-host, Alex Shanks. How are you doing?
Doing pretty good, Alex. We got some of our listeners. They want a bit of a shout out, I think.
It was my mom's 75th birthday 2 days ago. So happy belated birthday, Mom.
Happy birthday, Alex's mom. And then it was my dad's 67th birthday today, actually. And I cooked him some dinner.
Wow.
And we had
that's
a nice family dinner.
That's amazing. So we got quite a bit of news on tap today. I'll start off. We've had a pretty busy week. You were wrong. I was right. I'm glad. You know what? There was actually talk that there might have been a 75 basis point cut, but that seemed outlandish. But yes, the Bank of Canada did what we all thought they were going to do, 50 basis point cut. The key lending rate went down to 3.75. And let's be clear, that's not what you and I borrow. That's what bank borrows from the Bank of Canada, right? What it means for us is prime rate is now down to 5.95%. The next announcement is on December 11th, which we all expecting at least a 25 basis point cut, but it could be 50. We don't know. And there's forecasts for probably another 1% in cuts throughout 2025.
Yeah, and that's what I mean. In that case, like we're going to be around 3.75 is what we could roughly end up on, like a variable rate, which makes sense. That's what they talked about. And the closest thing now is we're getting fixed and variable are slowly finally coming back into parity. Like the gap is not so massive. I think
now after this 0.5% rate cut, it looks like a short-term fixed and a variable is still about maybe 0.5 to 0.7% higher, around like 0.5 to 0.6% higher.
Yep.
Now, friendly reminder, this only affects variable rates and lines of credit. You and I, with clients and everybody, thinking that this affects fixed rates. No, it's just variable and lines of credit. Now, there's two differences we were talking about before about variables. Do you want to talk about that?
Yeah, I mean, the first thing I'll bring up, and I was a little bit frustrated, to be honest, of all the people like, come on, like I've made a lot of videos talking about this, saying, hey, fixed are tied to the bond yields, variables tied to the Bank of Canada and the prime rate. But then you get our prime minister pushing out a bunch of news saying that interest rates have fallen to 3.75. It is going to make houses more affordable and renewals more affordable. And so I can understand the confusion of people with the news talking about interest rates dropping, that why would they not think their fixed rate's going to drop? If you saw that all over the news, Alex, would you not be like, my interest rate should drop too then, should it not?
Christopher Freeland, Justin Trudeau showing this graph that rates are now 3.75. That's true, 3.75, but it's not what borrowers get. It's what the banks get. So that was misleading in that, right? While it was true, it did go down. It only affects variable and lines of credit. So,
yeah. And now the thing is, fixed could come down, but everyone has to remember that those are on the bond yields. And the day of, they actually went up. The bond yields went up a little bit. And so that's where you have to wait and see. Your bank, your professional should be watching the bond yields to figure out, is there time for me to send in what's called like a rate float down to try and get you a lower fixed rate mortgage. But if you have a pre-approval with a fixed rate, your interest rate is not going to be dropping by 0.5% after
now,
the
even
Bank of
though
Canada
it did go up a little bit, we know that the trajectory is going down. So there is bumps along the road. It's not a straight line down. It is trending down, but it's not lockstep with the Bank of Canada. Now, I mean,
yeah, and that's where there's some news. There's some news on the US, which I think is pushing it up a little bit. And the other thing for people learning more on the commercial side, getting to see how prices are built in, banks are pricing about a profit of about 0.8 to 1.2 on the spread of that. So really, bonds have to keep going up for a few days in a row for like banks to be like, oh, I got to change my fixed rate mortgages. Same thing on the way down. They're never going to drop something as fast as it goes up.
No, I mean, it's a double-edged sword. It's great news for mortgage buyers, like variable holders, lines of credit people, myself included, great news. But there's always a double-edged sword to it. When there's a big cut like that, like 0.5%, it's a sign that the economy is not doing so well. The only times in history that they've made
and
0.5%
that's what
rate
people
cuts,
remember.
the most recent ones was during COVID, right? In the beginning of COVID, where they dropped 0.5% 3 times, right? Yeah, it was a big, about 1.5% cut when lockdown happened, when all these things that you see in a movie, oh no, it's the apocalypse happening. That kind of that fear when that happened. And this 50 basis point cut was based on everything that's been adding up. It was about right.
Inflation's hitting the number. I think people are still a bit scared of the housing market. They're not just jumping in. So the Bank of Canada, for one, feels that they're ready to do that. But it's also because they need people to start spending money, and they business owners out there. I think the one people that are really hurting are business owners. And that's where they need to be able to get some funding at a cheaper rate and everything. And it's crazy to see a home equity line of credit or even prime rate back in the 5s, where we were up in the 7.2. Like some people, like they were paying like 11, 12% on just a regular line of credit. Car loans, 18%.
Yeah,
it's crazy that
we're coming down, and there's some relief for existing borrowers. Now, will it help the housing market? It should, right? Is it all of a sudden going to light a fire to the housing market? I would say eventually we might see, once we see more cuts, probably around the springtime or summertime of next year, the housing market, all projections from Bank of Canada, other economists are expecting a robust rebound in 2025. Now, will it be the COVID craziness of real estate? No, I don't think so, but it'll be better than it was the last couple of years.
I think BC and Ontario are going to be a bit slower. I think Alberta honestly could see a bigger boom again here. I hope for my kids and I hope for homes, like, let's just get a nice steady. Let's go back to the 2 to 3% increases, not the 15 to 20%.
Yeah, it's become such a divisive issue that an existing homeowner wants real estate to go up, right? Because if you have the equity, you want your equity to grow. But if you're a home buyer, you want prices to come down so that you can enter the market. But once you become an owner, then I want it to go up. So it's such the divergence of interest of what people want. It depends if you're an owner or not. I mean, these rate cuts should help the resale market.
Exactly.
We're hearing, based on our business and the people we talk to, other realtors and such in the market, things are starting to pick up now. Properties that have been sitting for months or weeks, they're starting to get offers now. Not multiple offer, but they're starting to get some action now. So it's being revived, essentially being dead.
I want to jump back because I forgot to answer your one question there, Alex, about, so the rates came down and this has been happening. This is the 4th time in 2024, but your variable rate mortgage still has not dropped. Your payment hasn't dropped. I had a couple questions and everyone's, what's going on? Again, we'll say it. We've said it many times. And I guess we have to shout a little bit louder there, Alex. There is 2 different types of variable rate mortgages in Canada. You have a static rate, which a lot of people call a VRM, and a lot of the bigger banks, that's what they have. And then you have an adjustable rate mortgage. For me, when you hear adjustable, it means it's going to adjust plus or minus. If the Bank of Canada goes up, your payment's going to go up. If it goes down, your payment's going to go down. The VRM, which is that static, your payment is set. If you have a payment of $3,000, your payment's not going to go up or down. And we know, you tell me about what happened to your mortgage there, Alex, when you did have a lower, the variable static.
So when rates shot up, my lender, like they were static, but they on their contract, they didn't allow my mortgage to be negatively amortizing. So my payment did get forced to go up because I had to be at least paying the interest plus $5 of the principal, something like that. Now, on the same token, on the way down, it won't happen that way where it will go down. It's not built into these contracts where they will adjust it, like you were saying.
Your payment got increased and it's going to be there. If you were paying your amortization down, maybe you could have gone and asked for re-amortization, but your amortization is still a little bit higher there, isn't it, Alex?
Probably come down from the 99 years to 75, hopefully now in the 50s or 40s or something like that. with the
Yeah.
trajectory of where we see rates going, by the time I renew in 2026, hopefully I'm back in line with this crazy roller coaster I was. Yeah. So let's just, sorry to beat the dead horse, but adjustable rates, you were talking like the Scotia banks and national banks, their payments will go with prime. So it will go down with rates coming down. Every other institution, the credit unions and the other big four banks, I guess, RBC, BMO, TD, CIBC, their payments will stay the same. But more payment will go to the principal, less of it to interest. That means your amortization will go down. Now, yes, like we were saying, this should help the resale market, but do you think it will revive the pre-sale market?
Not right now, maybe after December 15th when they can get to a 30-year and like that stuff. But it's just the cost difference is too big still. A little bit more in the downtown Vancouver area, but a condo that's selling for $1,000 a square foot, but a resale is like 800.
Exactly.
I mean, like, why am I paying an extra $200?
It's pre-sales are pretty dead right now. More so in Toronto. Toronto is going to be quite the bloodbath, where they have the most cranes in the sky, I believe, in North America, next to Miami or something like that. And just like what you said, someone bought something for $1,200 a square foot or $1,100 a square foot, takes 5 or 6 years to complete. Since the market came down, what's the comparative resale? $950, $900. And they can't assign it because no one wants to pay $1,200 because it's not worth it. And if they want to close, they don't have the money. Like, the bank will only lend up to what the value is, and they need to come up with a difference. Then people will choose to walk away, and you don't just lose your deposit, but you open yourself to litigation and being sued by the developer. So it's not going to end well for a lot of people. So you're going to lose money. Either you choose to lose a lot of money now or like bleed slowly. So it's tough. Like, the last 15, 20 years, pre-sales have been the golden goose of lottery tickets, where when you buy something, you're going to for sure
make money.
There was a time where people bought pre-sales and had no intention of closing. And that's pure speculation, right? When you're hearing about what we hear in the news, it's speculators. That's not really investing. That's speculating. And it took a global economic event with COVID happening, and then it flipped upside down with rates shooting up. It just caught everyone off guard, and it totally made pre-sale assignments and flipping no longer viable.
I heard about this one story about, it's a developer and they had a massive building. They had to get their commercial financing on it. You have to sell X amount of properties to finalize your commercial. So massive loan on that side. Some lenders, they will do blanket appraisals on a full building. And so this place, let's say each place was worth $1 million by the blanket appraisal, but really on paper, it's worth 700. There's a bank out there that's financed them to the million. And it's mainly they're willing to bleed on the residential side, but they know the commercial side, they can't let it happen.
It's not looking good. So we got to move on.
And I mean, we got another thing. We can beat it. And I mean, this is a pretty big ruling. I don't know all the specifics on it, but there is a recent ruling by the Tax Court of Canada. Now, this is for Ontario right now, but it's indicating that homeowners who have regularly rented out their property on Airbnb or other short-term rental sites, they will be subject to paying 13% HST when putting that home up for sale.
So are we talking about the 13%? The HST is on the sale price of the home?
That's whatever you're selling the home for. I think you have to pay 13% on that. That's where you're going to really want a good accountant to figure out what percentage was Airbnb, what 13%. Like, it's not going to be 13%.
I'm interested to know if that 13% is based on the capital gain, or is that included in the ruling?
Now, again, this is solely for Ontario right now. But obviously, when one province does something, that sets a precedent for all the other ones.
It was a Canadian tax court, right? Not the provincial. So that's scary. I hope it doesn't start a tidal wave of things like that. And we know the government is hurting for money, and they're finding any way to tax. So this isn't good.
Yeah, and they want to find the easiest way. I mean, this is going to be mom and pops like that were renting out their house like with a suite in it. Now, the people that were doing Airbnb as a straight business, hey, they should be paying tax on that. That's not a question. But the other people, like, this is pretty big. And I mean, Why are we not spending some of our dollars, like our Canadian tax dollars, to go after like the corporations? Let's go after the big people to get some tax
I
money
hope
back.
if this sets a precedent, I hope it doesn't get stretched out to having to pay GST, PST, HST, whatever on long-term rental. If you do that, you're essentially saying we're going to tax you and no one's going to want to do it. So you're going to do the exact opposite of what you're trying to do, of your intention. So
that's, I mean, again, like the one thing I really find funny, the marketing that Airbnb has done is out of the world. Like there's other sites out there that are short term, but everyone, anytime you talk about short term rentals, it's Airbnb. It's just the marketing that they did was insane.
But of course, that's the whole, they get the spotlight on them when things happen, right? Just like back in our 20 years ago when we were downloading music. Remember Napster? Yeah, it was. Then it became LimeWire and all that stuff. Yeah, Napster got shut down, but then other things popped up. But everyone remembered Napster. There's a whole lot of other government news. Us here in BC, we just had a recent election, provincial election, and my goodness, this was probably the closest election that I've been alive for. Has it been the same for you?
Yeah, and I mean, I'll tell you this, we barely made it in for our election. We meant to go earlier, and then we forgot on the day of. Our kids were going to bed, and we had to take turns, me and my wife, to run there. It felt weird, honestly, this election. Just going in there, it felt a bit different. And then just the way that the stuff was going on in it and everything, it definitely was different. I mean, it was different.
For those of the rest of the country don't know, it was pretty close. The NDP and the Conservatives were deadlocked. In BC, to get a majority, you need 47 seats. The NDP have 46. The Conservatives have 45, with the Greens with 2. So as it stands right now, because it's so close, there's some ridings that the difference was off by a few hundred. So they're currently doing a recount of, I believe, 3 ridings. And we'll have the final results the weekend of October 26th, 28th. By the time you guys to this pod, that date would have passed already. So as it stands now, barring any unforeseen changes, we have a minority government with the NDP holding power. But just like how it is with the federal government, the balance of power relies on a smaller party. In this case, it's the Greens. When it comes to voting, I know there are some people who are saying, my vote doesn't count. Why bother? Historically, voter turnout was 60%. The turnout before then was 40%. I spoke to somebody who's into politics, and they mentioned that the turnout this time was 57%. So yeah, it's better, but we need more. If we can hit 70%, that's amazing. But folks, because of this difference being so close, your vote actually mattered. Where differences of 100, it makes a difference.
I think it was 20. It was 20 was the Wanda Fuca, I think, was 20 like votes. That was the difference, which is, I mean, that's a difference.
It was really weird too, where there was quite a bit of people that weren't really educated on this election. They were on Twitter and mentioned that, I voted Conservative because I didn't want a Trudeau in power. This is not the federal election, right? And they're like, then who did I vote for? Exactly. Things are happening in the federal government just trickle down into our provincial government as well. I was hearing too that when it came to some of these town halls where the candidates came to share their party platform, a lot of them Conservatives didn't show up for, but the Conservative candidate ended up winning that riding. Yep. So it was weird where that's happened a lot. Yep. And
that's what I heard. Ours, there was never did any polling, never. I think he came to our door once. And our riding still ended up being NDP, but it was like, whoa, for someone not even doing anything and almost winning, that means there's change in the air. Something needs to happen. And I mean, I hope it lights a fire under NDP to be like, all right, we need to listen to the change.
Map on BC. And NDP's hold is the metro areas, a large majority of the lower mainland, and I believe parts of the island as well, right? Especially around Victoria, because it's government and stuff like that. Yeah, but all the outskirts is mostly Conservative, a minority government with the NDP, and we'll see.
Are we going to be getting $1,000 in our bank accounts here soon or something?
I don't care about that money. It's not
it's going to make inflation all better.
Put it to healthcare or something.
Exactly. That to me is, if you're people that you really do need the money, please, I want you to get that money. But there's a lot of us
It's
that
not going to
don't
make a
need that
difference.
money. And
Like, can we lower gas prices, please? Or something that makes a difference in our
yeah,
lives.
yeah. I'd rather round it up. One thing, did you see that guy? I've seen him on TikTok, the potato guy, the potato tie guy that I think in Chilliwack he does. It's called an ugly potato. His family owns a potato farm, and there's certain vegetables you can't sell to the store because they don't look good enough. He's been doing this for a while. Like he'll set up a thing, have people, you get free food. It's free vegetables and stuff. And previously it was like 200 people came, 1,000 people came, 5,000 people came. 15,000 people came to this thing on the weekend. I mean, it was pouring rain. That, like, to know that there's that many people that need food out there it's scary to me.
Yeah,
Like, that's so scary.
speaking of that, when it comes to food prices, I saw something on Twitter today where there is a company in, I believe it's Quebec, that is going to be selling all the food that's past due. Not like meats and stuff, but that's past their best before date, and selling at a discount. And I'm pretty sure they're going to be busy. Like things that obviously can be eaten, the past, like crackers and all those kind of things, or a day
Yeah.
old bread or something like that.
I wonder about the insurance on that, though. I wonder what they have to do for that.
I
Someone's
learned
gonna
this
sue
in
them. I'll put
university
money
when
on
I
it.
was
Someone's
taking
suing
a
them.
nutrition class. The best before date does not mean after that date it turns into poison. Yeah. Of course,
Exactly. No, for sure.
like it's the same thing when it goes to milk too. Even if it's past that date, it doesn't turn sour right away. I've had it where I did drink it a
No.
day old and it was fine. But of course, you have to, when you have to
Yeah.
smell it, that means it's not good.
Do the sniff test. You got to do the sniff test.
I'm pretty sure when it comes to, they have certain guidelines in terms of selling the best before date ones at a discount. Here in BC, we have no frills, and that's like a subsidiary of Loblaws. But like cheaper foods that are not the highest quality, and I'm sure there's going to be a market for it.
Yeah, there was a fire at a Walmart. It was in like a clothing section. They had to shut down the entire store. It was a small fire. They got it out, but it smoked out a lot of things. They were trying to dump all their stuff. Now, I understand that they were doing that for insurance purposes, but they were trying to dump all their food, everything, into our local dump. After 3 truckloads, the dump was like, whoa, what's going on here? The city had to get involved. And it's like, what are we doing here? Can we find a better way? Should some of this food be going to people? And yeah, they ended up changing it, obviously, after the pressure, but they were just going to dump everything. They were just going to take their insurance claim. And I understand their risk because they don't want to give the food out and then be sued. But it's sign something. Hey, I'm taking this food. You cannot sue me.
All right, we got to roll this along. We're taking more time than we thought. There's more unrest in the government. Like we talked about it last week, where Justin Trudeau may be stepping down, or there's enough 30 cabinet members or MPs want him to step down. But there was this rumor that's been floating around that if Trudeau does step down, that former BC Premier Christy Clark may be in line for the Liberal Party leadership. Now, because the rumor was that she was taking French classes to get ready and all that stuff, but she quickly denied it on Twitter. Yeah. And oftentimes with rumors, if there's smoke, there's fire, maybe?
That's something. I saw Justin Trudeau came out. They had their cabinet meeting and everything's fine in the Liberal Party. Everyone's on the same page. He gave the cameras a thumbs up.
The funny thing
we're
is,
all united.
I read about that too. And during his 20-minute caucus meeting, apparently he was in tears speaking to the cabinet ministers that all this pressure is tough for him and his family and all that stuff. When you make terrible policies, I mean, it's not like we don't care about you as a person, but we don't care about that personal part. It's the policies that you have in the leadership of your country. But yeah, if it's taking a toll on you, then step aside. Yeah. So something else going on with immigration.
That's they're listening to the outrage, and there's going to be no more. That's not allowed, and that's not true. It's going to be allowed. It's just they're going to try and cut it down.
Yeah. So the federal government is caving to public outrage. They are pledging to slash permanent resident intake over the next few years by a total of 20%. So they're going to bring it down to 395 next year, and then reduce it another 15,380 in 2026 and 365,000 in 2027. Now, if you're asking a lot of us, It's not enough.
What was
People
it?
want it to be zero, but
What was it meant to be in
it's
2023? Yeah, but I mean, what was it meant to be in 2023 when 1.1 million people came in? I mean, there's other ways to get into Canada, and a lot of that's not reported.
We've talked about it before, but between permanent residents and temporary foreign workers, total immigration, it has contributed to the housing crisis because they let in a whole lot of people, but they didn't figure out the housing. And guess what? We know from the law of supply and demand, when you have a lot of demand but not much supply, guess what? It pushes prices up in terms of housing price and rent. And it puts pressure on the system, healthcare, food, everything.
Yeah, and that's what I mean. To me, it's bring people in, but we need to bring the right people in. Let's try and maybe match the housing market for a year or two. Let's build as many houses as we bring people in.
Yeah, they
need
to
bring up that supply.
The intake of either permanent residents, temporary foreign workers, what have you, to the number of houses that they built.
Yeah. Or they need to make it easier for people to want to rent their houses with suites in it. If I was thinking,
would you run for office?
For government here, but if I was sitting in a room, no, I would not. I would not at all. But if I was sitting in a room and trying to figure out this way, I look at everything in a very analytic way. If I was going to be like, all right, we need to bring 500,000 people in this year, where are all these people going to live? Like, where are they going to stay? That's where I would first sit down and be like, okay, do we have 500,000 new homes? No. Okay. What about our rental market? Oh, no, we're at a 0% vacancy rate. What about our hospital beds? It would be so easy to hit those checkpoints and be like, okay, we got a problem.
Yeah, I remember back,
we got to figure something
before
out.
My time, but when my wife's family came to Canada, they had to go to Saskatchewan. And so maybe what you were saying, because 60% of the country is concentrated in Vancouver, Toronto, and maybe Montreal, include Alberta a bit, but if they spread the population out, then other cities, yes, they'll see growth, but they may be able to handle the building as quickly and all that stuff. So
totally.
But yeah, I think it's time for viewer mailbag, right?
So this is an interesting one, and I feel like we'll be able to talk. What do you do if you have a bunch of real estate and you're looking at retiring?
So when I look at this, it's a loaded question. It really depends on, do you plan to keep the real estate and retire? Or are you relying on the rental income from your rental properties, assuming they're rentals, to help supplement your lifestyle? OAS and CPP is not enough, so you bought real estate and it gives you a monthly income. Now, chances are, if you're senior, you're probably not at the place where you want to manage properties anymore. You might have done it when you were younger, so you might want to outsource that to a property manager. There's the other option, right? You want to talk about, Alex?
Yeah, I mean, the big one thing for this to me is I feel like people sometimes miss planning. I had a financial advisor, but they may have only been looking at investments. You need someone looking at your financial investments into that type of asset class. You need someone helping you with real estate. You can work with a mortgage professional, work with someone that can help you figure that out. It needs to be a plan to be like, hey, I need to have 100,000 to be able to retire a year. What type of assets do we have? Okay, if we strip that X amount out of your investment portfolio, it's going to be gone in 10 years. Maybe do we talk about selling a property in year 5 to boost that back up? There's ways that this can actually be planned out properly, where if someone just says, I'm just going to sell it all, then in 5 years, if you're still living that high life, you might be like, holy shit, my home is now worth $2 million. I sold it for $1 million. And that's where I think there should be a better map. You don't pay taxes on equity. You can pull equity out of your house to live the life you want. The tax man's not coming after you when you're in your grave.
Another angle that we have to consider as well is, if you're near that retirement age, if you have children, chances are adult children that you want to gift them an early inheritance. More and more these days, parents or seniors are realizing that, people like you and I at our age are middle age. At least I'm middle-aged. You're not there yet. It's tough to say, like, we can't wait for our parents to die. That's very taboo to say, but to help them now rather than in 10, 15 years where we've already struggled enough. And by that time, it'll flow through me into my kids. So there's that angle too, where is this person retiring and wanting to help their family as well?
That's such an old school thing of I'm going to leave my family with all this
Yeah.
money, but they're going to get it when I die. It's just so weird. I love talking to the family that they're like, I want to see my kids grow up in their new home that they're going to buy for their grandchildren. And it's accessing that equity for them now, being like, hey, here you go. You're able to get into a house, or hey, we're going to go on a family trip every year for the next 10 years. It's like enjoying that life now, not being like, awesome. Thank you, parents, for passing something else down to me. But I'd much rather enjoy the life with you today.
Especially, I know being of Asian descent, we're talking about retiring to, talking about wills and estates. And when I mention it to my parents, because it seems taboo to talk about, because like the parents will think you just want your money, or you just want us to die sooner, all that stuff in it. And there's a taboo behind it. And I was talking to clients about it. It's really tough as a child to talk to your elderly parents about. Folks, if you're in a situation similar to us where our parents are getting older, by us talking to them about it, it seems like we have an agenda behind it. Better to have a third-party professional talk about, a financial advisor who's a estate planner who has helped them plan for their future, and so that they have no skin in the game, depending on what your parents or your grandparents do. Yeah. I know I face it in our culture, probably same as you too, right? This is a familial thing.
Yeah, I mean, I do know, like in your culture, it's definitely, I find it's way more. And I mean,
they're
like,
both retired. Is
your mom still working?
Yeah, they're both retired.
Is she retired?
They're 75.
Okay, that's good to know.
Our culture, our family, when it comes to the tough things, like when it comes to like wills and all that stuff, they don't like talking about death, because by talking about death, it means it's going to come faster. I'm like, we have to talk about this whole like will thing and the estate thing, like all that stuff. And we're going to have a guest that's coming on in the next few weeks that will talk about wills and estates and estate planning and all that stuff, having, put kids on title and probate and all that stuff. But those are things that you and I at this age, we will have to worry about for our parents pretty soon. Because as our parents age, and those things that we have to deal with when it comes to estates and being the executor of our parents' wills and all that stuff. So yeah, this question just opened a huge can of worms, but we'll talk it more in future episodes.
We could dive into this forever. We'll leave it at that, but sitting with a professional that can help you talk about it, because there isn't a perfect, hey, just sell all your real estate. Hey, do this.
On your
it really
goals,
depends on your lifestyle.
What age you are at, and if there's other family in play that you do want to splice out some of that in early inheritance and gift to your kids or grandkids and all that stuff. So talk to a professional. All right. So the next one here is, I'm looking at getting an Airbnb rental property. How does that work?
I bet you we've probably already answered that question. Do you want to get taxed 13%? And so buying like a specific Airbnb rental property, I mean, depending on your province, it's not allowed unless your municipality still allows it. But I mean, I would be pretty scared of buying a short-term rental in BC right now. There's a couple of municipalities that still allow it, but I mean, what if they take it away? Now, if I could look at it and I broke down my numbers and said, hey, if I can do short-term rental and I make a bit more money, but if my numbers work at a long-term rental, at least I know my assets protected that way. And that's the way, like, I've always looked at investments, of showing people that were looking at these type of things of what does it look like as a long-term rental? For one, most lenders do not lend on Airbnb rentals. We know that is like the biggest no in the lending space there, Alex. There's certain lenders that will allow it, but it's very hard and it's not a guaranteed asset. And I'll help answer people, because I always get it like, why I'm getting all these Airbnb rentals, like, why can't I use that income? The problem with it is, let's say if you booked at my place right now, Alex, you're going to pay me $1,000. I get that money. It's in my bank account. If you cancel it, it's going to come back. The income is not guaranteed. It may look great. And that's where lenders will start to look at it after a 2-year average. If you got 2 years of paying taxes on it, they can use it. But you can't say, hey, I just made $100K, because that money all could come back.
Airbnb is not treated like rental income. It's treated like business income, where you need a 2-year average on it. And I see the rise of Airbnb is more on the rent control provinces like BC and Ontario. It was almost like, because We were rent controlled provinces. We couldn't raise the rent enough to meet the housing cost because of rent control, right? We can only increase it 1, 2, 3%, whatever it is. And Airbnb was an outlet for people to be able to earn extra money in cash flow. I mean, running an Airbnb is like running your own hotel. It's a lot of work. We actually did that for a little bit, and good thing we outsourced it, but it was a lot of work. And if you're considering getting it, like you're signing up for a part-time job, part-time / almost full-time job, having to market your place, check out your competition and all that kind of stuff, and deal with cleanup, changeover, inventory, all that stuff. It's not what it's all cracked up to be. And if someone is looking into that,
I mean, that's the thing of real estate. Everyone's like passive.
It's an active business.
It's not passive. Long term, everything. Real estate is a job. There's been a few years that it wasn't, and it made people get used to it. And I know Airbnbs that were doing really good, and now they're doing bad. The money isn't free flowing. People aren't traveling local.
I would give them another devil's advocate angle. If you're thinking about that, why not just, how about another idea is invest in another province that's not rent controlled, i.e. Alberta, right? Where it's just a long-term rental. Now, obviously it's a different province, so you'll have to have a property manager manage it for you, but it's not a set it and forget it, but it's easier to manage on a day-to-day. Whereas Airbnb, it feels like more of a riding a stock market where it's day-to-day kind of thing, where you're always got to like track week to week. You're adding more stress to your life.
The only one I think it really works to me is if you're maybe a younger couple, you're buying that house, it has a rental suite, but you want to make sure that family can come, and you don't want to put a renter in, especially in BC. You don't want someone stuck in your house. Yeah. That's where it makes sense to me, because you can make it nice. You can do cleaning. You're not like trying to do a lot of work on it. And hey, if you can make an extra $1,000,
like I can see it working.
Hey, that's awesome.
Like you said, it's in your own home, which kind of the laws are like that now in BC. It's in your own basement. You want to earn more than what a long-term rental would be. And you don't mind being essentially a part-time job for you, where you're doing the tenant changeover. You're essentially in hospitality now, right? Give them the keys, all that stuff. Exactly. Good reviews,
answer the phone if something doesn't work.
Attracting. Yeah. So I can see it that way if it's something that you envision yourself doing, but don't look at just the dollars and cents, but consider what it means for your life.
But I can make $5,000 a month if I rent it out every night, Alex.
It better be downtown, gold toilet seats or something, and whatever. So you got to look at your market. Who's your your property, where is it, and who's your ideal client, or who's your ideal renter. So, like going in with the thinking of, oh, I live in the suburbs, I live in like Langley or Langford or whatever, and thinking that you're going to make $5,000 a month when your place is half an hour drive away from the downtown core. I'm like, okay, chances are an Airbnb would be someone who's visiting family in your area. Better. And you can only charge whatever the market can bear, and you got to look at your competition. Okay. We had a pretty long episode today. I think this wraps it up.
That went longer than we anticipated.
On behalf of my co-host, Alex Shanks, I'm Alex Pang. Thanks for tuning into this episode. We'll see you next time.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email, because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.